All right, good evening, everybody. I would say God richly bless everybody for joining us tonight. This is the fifth time that we are doing this town hall or tax education. During the COVID, we started this tax town halls because we found out a lot of our Ghanaians or our community um, members of our communities where some of them were confused on how they do their taxes, or even if somebody does their taxes for them, sometimes they don't even understand it. And I remember a few years ago, we have people who were having troubles being called by the IRS and all those things. And this tonight, we are so happy that were able to call upon some people or some experts or people who do the taxes for us to come and at least educate us on that. Um, each year, we normally partner with a lot of organizations, and this year, by the grace of God, the men's and women's ministry of the Church of Pentecost, Dallas Central, are the one who has at least hosting us, or I would say that partner with us so that we can be able to educate the members in this community. So we want to say a big thank you to the district pastor and also the presiding elder of that church for giving us this opportunity. Um, I would like to introduce the panelists, but before that, I want us to make sure that we do the same thing that we do this each year. But if you are new to this, I just want to let you know that when we do this education, what we do is that we found about two or three um, members of our own community, which is people from Ghana, especially, who prepare taxes so that and they understand our culture and also understand the community. So they will be here to at least give us 10 minutes of some education. Trying to mute. All right. Sorry about that. They give us 10 minutes of education about our taxes, and after that, we'll open the floor for everybody to ask their questions. But we will also provide their contact information because we also believe there may be some questions that you cannot ask right here, that it may be personal thing that you need to contact them to maybe ask them. So we'll be providing their contact information on um the um the chat area, and also they will be also posting their contact information on the chat area for you all. And even after the program, in case you need their contact information, you can contact me and I'll be able to provide those to you. So without much wasting of time, I will first since call on our own sister, Mrs. Bridges Danso, to at least give us an open prayer because we have to start everything with God. So we will ask our sister to give us an open prayer before we go to the next part of the program. Is Mrs. Danso on our miss?
Yes, sir, I am.
Over to you, ma'am.
Okay. Thank you. Okay, can we please close our eyes? Our Heavenly Father, we thank you this evening. We thank you for giving us this opportunity to gather on this Zoom meeting tonight to learn about finances. We pray and commit this program into your hands. Please come and take your chair in this program. Let this program run smoothly without a hitch and let us fulfill the purpose of being here tonight. We pray and commit all the speakers into your hands. Please speak through them as they share their knowledge and expertise in this field. And at the end, we'll give you glory. This we ask in Jesus' name. Amen.
Amen. Thank you. Thank you. Thank you so much. So, with that note, I'll go ahead and introduce the panelists. And after that, they will all have about 10 minutes to give us something. And after that, we'll go to the Q&A or the question and answers platform. So I will start with Mr. Kofi Atta-Opong, and they will also do their own introduction. This is just a quick introduction, and when they come in, they will introduce themselves proper to us. So, Mr. Kofi is the founder and the CEO of IRS and Road Agent Tax Instructor, which is he's even the one who normally teach, and I know he has so many classes for those who are interested to file taxes. So Mr. Kofi is on our midst tonight. Thank you so much, Mr. Kofi Atta-Opong, for being honoring our invitation to help us tonight. Then we have Mr. Theodorus Kwamla. I'm always sorry about if I didn't pronounce your name well. Our brother too is also a founder and owner of Granity Tax Pros, and he's also do taxes for us here. And I know he will be able to introduce himself better and his company and what he does when he joins us. We also have our own Deacon Louis Yeboah, who is the men's ministry leader of the Church of Pentecost Dallas Central, and he's also an IRS auditor. And I just want to say, Deacon has been, I think this is also his fourth time with us, because anytime we call on him, he is here to help us because he work over there and he help us a lot. I mean, personally, I have introduced a lot of people to him, and he is one of our panelists, and also he's been on our panelists for almost 4 years now. Thank you, Deacon, for being there for us. So with that much say, on time, we will start as it on our flyer. Mr. Opong will start, then we'll go to the next, Mr. Theodorus, and then we'll Deacon Louis Yeboah will be the last on our on the list for us. So, Mr. Opong, thank you so much for honoring our invitation. Can you please introduce yourself better? This is just a quick introduction. Then,
all right, sure. Thank you too, and okay, my name is Kofi Atta-Opong. I'm an IRS and road agent. I'm also a tax instructor, and I've been in the tax business for 23 years. So I handle not only individual income tax, but corporate, non-profit. I'm a full-time practice tax person, so I deal with a lot of things. Now, not long ago, Mr. Manfo contacted me about this day that as a community, if with all my years of experience and knowledge, it will be helpful if I can come here and share some with you, and if there's any questions that sometimes bothering some taxpayers like you, I will be able to discuss it. And with my fellow members, which being Louis and Mr. Tio, who is also in the tax business, then we can co-host and help educate our community about taxes. So I know you said whatever we have to say, I'll briefly say something, a little bit about all these years, my experience on some things, so that I can give the platform to the other people, because at the end of the day, no matter what I say, might be questions that bothers your mind, and the things that I will say might not necessarily mean that, okay, that's what you're here for. So I'll be brief on whatever I say. From all my years of practice, one thing I've realized, and one advice I'll give to we the Ghanaians and our community, is about how we prepare ourselves to file our taxes. That is very, very important. When it's tax time, let's be patient and make sure that everywhere we work, we have those W-2 forms. Every activity that is tax related, let's make sure that we are patient, we get those documents before we file our taxes. The tax world is changing and evolving. Sometimes even things that is not tax related could be tax related without even we knowing. Some of you who have been here long enough realize that at a point in time in America, healthcare wasn't part of our taxes. And now, sometimes, you go to the health, the marketplace, you buy insurance, even some states mandate. So now it's part of it. So the point that I brought this up is that When it's tax time, let's be vigilant every mail that comes to our home. Let's not just say, oh, this looks like a junk mail. Open every mail, because there could be some paperwork that is coming to you that's tax related that you might not know. And anything that states that is important tax document, please don't take a picture and ask your tax guy, is this important? Add it to your tax documents and let your tax guy decide or discuss it with you. Add everything. So those who are good with electronics, you can create an electronic folder. But my basic advice to taxpayers is that beginning of January, have a folder. Make sure that anything that comes into the mail that states that important tax document, put it in that folder. Because remember, we have kids, we have family, we have spouse. Sometimes we leave things on the table, kids could push it somewhere, oversight, we might lose track of it. And I'll later explain why these things are very important. So that you have in the folder, you put everything in it. So at the end of the day, you know that, okay, this is where I get all my tax document for the tax year 2024. And before you submit your taxes to your tax person, make sure you give yourself about 10 to 15 minutes, sit down, talk to yourself. Okay, last year, how many jobs did I do? How many places did I work? Okay, I did 3 jobs. I have 2 W-2 forms. Oh, yeah, I need to wait for the other one. Okay, last year, maybe I did this, or I have a mortgage. I was told I'll be able to write my mortgage interest and property taxes. Do I have the paper? No. Okay, let me log into that account. So just also give yourself a little bit of time. And I normally categorize tax preparers into 2 from my personal experience. There are people with simple tax, and others with complex taxes. Complex is when they have multiple job, mortgage, they trade, they have self-employed. So their taxes kind of like here and there. If you are that type of a taxpayer, please give yourself some time before you file your taxes. Maybe in the middle of February, around March, because rushing to do your taxes, you might forget something. And forgetting something is one of the major reasons why people get audited. In most cases, when we are filing our taxes, IRS don't have all the documents we are filing with. The time for the employer to give us our tax documents is different from the time the employer has to submit those documents to IRS. They are supposed to give it to us sooner, most cases by January 31st. But to IRS, there's more time. So IRS don't have that knowledge. So when you don't take your time to go through your document, make sure that you have everything, and then you go ahead and file, then later IRS will get all the documents and will not match with what you have submitted. And that could trigger an audit. And it's one of the reasons why people get audited. And guess what? Maybe something you have done, because you didn't take your time, auditor goes into the system, that gives him the opportunity to question everything on your taxes. So let's keep a note of that. And also, from my experience, I have taxpayers who, when they get one W-2 form, they take a picture of it, they send it here. Please don't do that. Wait till you have all your documents. Wait till you have everything so that you send it once. Nowadays, because of electronics, most tax preparers is all virtual. You send your documents to them, they prepare it. So if you don't take your time, organize them and send like one file, and you keep sending them pieces of information here and there, the tax preparer, if he's not that good, or he's a human, he might lose track of some of your documents, and you end up submitting less documents than what he's supposed to, and that could also make you vulnerable for audit. So I'm not going to take all the time. I know questions will come later. This is based on my experience and what I've experienced in the market, in the business, how people get audited. So I'll give the platform to my other tax professionals to introduce themselves.
Thank you very much, Ralph Frank, for this invitation to help provide some information about taxes to our community. And I appreciate your invite to be part of the discussion. So I'm just going to share my screen briefly to provide the introduction and a few points, highlights, and then the questions may follow thereafter. So I'm sharing my screen. Okay, can you please see my screen?
Yes, we can.
Oh, okay. So that is my name, Theodore Kwamla, licensed financial professional. I'm the founder of Unity Tax and Business Services, and operating from Mansfield, Texas over here. And I see some familiar faces and names on the platform already. So I'm no stranger to the community, and thanks for those friends and brothers who have joined. I will talk briefly about some areas that you may be asking questions about, and then when your questions come, we can provide more detail. So Mr. Kofi did a good job providing us a highlight of how we can prepare ourselves for the tax season, which is very crucial. Tax is all about organization. Even with those who prepare the tax, we can tell that when it comes to even using whatever software we use, it's all about how you organize numbers. It's not mathematics, if I'll put it that way. It's all about organization, putting information into correct forms, correct areas, so that you can get an output. So as Bra Kofi said, being organized is very crucial, is very important, from the way you organize your documents till submission to your tax preparer is very important. There are some areas that I will highlight, which are terminologies that many of us may not be very conversant with, which we need to understand as we go into preparing and submitting our documents for tax filing. The first one I'll briefly talk about is the tax bracket. Do you understand your tax bracket, where you fall? So we don't want to just submit our documents to a tax preparer without knowing much about where we ourselves individually stand. Yes, of course, your tax preparer is going to ask you a series of questions to bring out some of these areas, including your tax bracket. So be prepared to answer questions when you are asked about what a tax bracket is, and also get education from your tax preparer. So the tax bracket basically is an income range that is taxed, and in the US federal tax system, we have what is called a graduated system when it comes to tax rates. So your tax preparer will be talking about tax rates, tax brackets, and make sure you understand where you fall when it comes to that. Now, the other aspect is what is called filing status. Everyone must know what their filing status is and what it will be. So, by definition, the status that you may be categorized under is defined as when you file your form, the type of tax return form that you use will depend on, or will give you what filing outcomes you will get. So there are different filing statuses that comes with various factors that come with it. It is linked to how you are married, your marital status as well. So it is very important that we understand what our filing status is, and then what our individual tax brackets as well will be and is. Every year, whatever happens between January to December 31st is very important when it comes to your taxes. And you have to understand and go about your taxes in a way that will not put you into problems. You have to do it right, do it honestly, so that you don't get into much problems. So we'll talk and answer your questions about filing status in detail. The other areas are the various 5 categories of filing status that we have: single filing status, married filing jointly, married filing separately, head of household, qualifying widower, surviving spouse. These are the 5 filing statuses that we have at this time. You may fall into one of these categories, and you have to file it rightly. You cannot file it wrongly. If you file it wrongly, it will come back to bite you. So you need to know where you are and file it correctly. The other area I'll talk briefly about are the deductions and credits that, of course, we'll be answering your questions on. Do you understand what the standard deduction is, what itemized deduction is, and what credits you can get? We'll talk about those in detail if you have questions about deductions and credits. Then the basic 2024 standard deductions amounts that we have for this year. IRS has provided the numbers already, and we'll provide those to you. The other area is earned income tax credit, questions that you may have that you can ask, and we can provide you some more detail. The eligibility requirements for the earned income tax credit. We have requirements that we need to meet, so we'll provide that as well to you. Then qualifying child, the conditions that come with it. Then the tax brackets that each of us need to know and where we fall. We need to clarify that for you as well. Then if you are a senior, if you are 50 years and above, how can you take advantage of the senior tax breaks that we have? If you have questions around that, we'll be glad to provide those as well for you. And then things you can learn from your completed tax return, even from last year. We would like to draw your attention to what information is on it and how it can be helpful to you. So common IRS triggers that we can avoid, we highlight those as well. So if you have questions surrounding that, we'll be glad to go into that in more detail. So I wouldn't want to take all the time. We'll like to invite our next speaker to introduce himself. And then when question time comes, we have more than enough brains over here to help you answer your questions.
Thank you, Theo. Mr. Yeboah, over to you.
All right. Good evening, everyone. Please, can you hear me?
Yes.
Yes,
Okay.
yes, we can hear you loud and clear.
All right. My name is Louis Yeboah, as has already been said, and I am an IRS agent. But let me issue a discretion here. I do not speak for the IRS. I'm speaking to you tonight or this evening because I'm a member of the community, and I deem it fit that it is important for us to help our community, our own people. So I'm here to share my experience. If I can offer any help, I would rather. Unfortunately, I don't prepare taxes, so I know most people try to reach out to me. Luckily for us, we have 2 tax professionals that prepare taxes. I audit taxes. So I've been with the IRS for 15 years now. I started as an auditor for the small business and self-employed. So I do individual tax return audits. I do businesses. But now I'm an appeals officer. So what I do is when there's a dispute, if you have an audit and then you disagree with the findings of the auditor, then you can appeal it, and it comes to my office. So I do see multiple different kinds of returns, including audits of tax return preparers also. So I would say I know quite a bit about different kinds of the businesses, how they operate. And as most of the 2 speakers have already said, taxes is all about planning. You got to plan it well. You just don't go in and say, hey, I want to start making money off of my tax return. You can't just do that and take your W-2s and expect to be making huge sums of money. Some preparers will try to make things out for you, but trust me, if you've ever been on the wrong side of the IRS, you would appreciate these lessons very well. That if you do not plan to make more refund money, don't force it, because when we come after you, it is stressful. It is hard, so you can avoid it. I'd rather ask that if you have questions, do contact people like as me. My lines are always open. I'd rather help you not to get in trouble than to wait till you get in trouble, then you come chasing after me. I may be able to help, but maybe not as much after you get yourself in trouble. So we'll actually, I guess the questions and the answers will help us more, because if I want to talk about things that we look for, I think it's already been said. Some of them have been said. You need your tax return, in a whole. If you actually doing it right, it is a snapshot of your lifestyle. That's what the government looks at. Government sees your tax return, and then they can at least determine, or I can estimate who you are by just looking at your tax return. So your tax return affects multiple facets of your lifestyle, and we want to see you that you live your lifestyle according to your tax return. So if your tax return is showing you have more money, yes, we want to see if you buy anything that is expensive, we would not bother you. But if your tax return shows that you're barely making a living, and then you're out there driving expensive vehicles and all that, we have a CI in the IRS also that can also follow you through. So we have to be careful about our taxes. Taxes help when you're going to do your citizenship. If you want loans from the bank, it affects so much of your life. So I would advise everybody, take your time, as the previous speakers have said. Make sure it is done and done correctly. Claiming children, I know people will say you can claim your child, but there are laws to follow. The child has to be in your possession more than half of the year. You have to be actually the one taking care of the child. He has to be living with you for more than 6 months for you to claim. So there are other things that I will not take much time. I think our answers would help as you bring forward your questions. We'll do well to answer. If you need maybe one-on-one discussion, yes, I think Frank will post my phone number, and then we can take it from there. So that's what I have for now, and we'll be waiting for your questions. Thank you.
Thank you so much, Mr. Yeboah. Ladies and gentlemen, we thank you also for joining. This is our 5th time, and I love this panelist. Normally, it take up 45 minutes to an hour before they finish their presentation. So this is I know we have a lot of questions and we have a lot of time. So please, you can unmute yourself and ask your questions, but please make sure that you raise your hands. And there is also going to be a chat column over there. If you have a question that you want to send through the chat, please can go ahead and send the question through the chat. Just let you know, if you want to speak any African language too, trust me, Ewe people are here, Ashanti people are here, Ga people are here. You can ask any question that you feel free to ask. If we don't have interpreter here, we'll do our best to help you as much as we can. So you are free to ask your question in any language that you want to ask, and we will be able to help you. So please, if you have a question, we don't want to wait for the last minute. So that if you have a question, please, you can raise your hands up. We'll call you and you ask your question. If there's a noise on your background, please mute yourself for us too. That would be great, so that we can make sure everybody understand what is going on. Thank you so much. Please, the floor is open for questions. So if you have any question, you can ask it, or you can also send it to me directly if you want to. and I'll ask it for you. Thank you. Please, questions time. You have a question for any of the panelists? Yes, we can. You can have the okay, Louis. Thank you, Mr. Eba. Please, the panelists, if you can type your numbers there for us too, that'd be great. I know, you know, some people may just join us, so. Thank you, Mr. Theo. Any question for the panelists about taxes?
Can I please ask my question?
Yes, go ahead, Mr. Matthews.
Yeah, thank you so much for this opportunity. You know, here the biggest problem is lack of information. So when there's a platform like this to be able to get in touch with people who knows much about the system, it's a great opportunity. My question is, is it much better to have a established side business to help in this tax return issues? Because I've heard people saying that, oh, you need to just get a business, establish a business, and that will really help you during your tax filing. Thank you. The rest, I think I will reach out to the panelists personally and talk to them.
All right, the panelists, anybody can answer if you have any answer for that.
All right, I think I'll take this. Thank you for your question, and I hope everybody can hear me. And I'm speaking to you as from the government side of the aisle, right? So if somebody tells you to get a business and then that will help you in your taxes, the first objective is you're going to make losses, right? So if you are not making losses for that business, then I wonder how is that going to help you? Because if you're making profit for that business, you have to pay tax on any income from that business. So if you are going to artificially create losses for yourself, then I'm happy to tell you that you're setting yourself up for trouble. But indeed, if you have a legitimate business that you want to conduct, yes, I would advise that go ahead, form your business well, do all your proper registrations, get the EIN number, and then make sure you keep proper books and records for that business. Because if you have a business, you have self-employment tax if you make profit. But then the reason why people tell you that you can, if you have a business, it's going to help you is, let me give you an example. Let's say, assuming you have a W-2 job, right? You make $100,000. After your standard deduction is $80,000 that you have to pay tax on it. We call that your taxable income. Now you have a Schedule C, which is a self-employed business that generated losses of, let's say, $30,000 or let's say $50,000, right? So your losses is going to reduce your taxable income, the 80 minus the loss from your business, which is 50. Now, instead of us taxing you on the taxable income of 80,000, now because of your business losses, now we are going to tax you on only 30,000. Okay. So what is going to happen is throughout the years, you will continuously create losses. And that is what the government does not like, because you have so much time to create losses, even for a legitimate business. So if you consistently create losses, then you are trying to have the government in your business. Now, when we come, mind you, we do not come for only 1 year. If you are not lucky, if we see consistent pattern of the same issues, then we're coming after you for 3 years at least. 3 years. So I would say do the needful, do what is you. If it's not for you, if you have to make some estimated tax, and that's one thing that we don't do as Ghanaians, you can make estimated taxes that will help you so that you don't have to forge when the time comes for you to prepare your tax return, so that you don't have to pay taxes. And estimated tax, there are so many ways that you can do it. You can just electronic federal tax payment system. You just go in and throw some money down. If you're a W-2 higher wage earner, you can also withhold more. If you don't have the money saved to pay in case you have to pay back after you file your taxes, there are steps to follow, and I think our tax practitioners can guide you. And if you reach out to me, I can also be of help to you. So that's what I would say on that. Do not put yourself in trouble if you don't have to. Thank you.
All right. Let me come in quick. Luis said one side of this equation, and I'll also emphasize on another thing. In the first place, to have a business, you have to have a skill, a knowledge, or something that you're going to offer. You don't just create business. Because having a business, there's so much that time, resource, efforts put into it to run that business. And like Luis rightly said, the sneaky part is what they tell you, go do all this write-off every year, have a loss. And having a loss for some time, constantly running a loss business can make you vulnerable for audit. So that one he has explained it very well. But then let me look at the other side too. The other side is that most people start business as LLC. Okay, so you're being smart. Not only you want to write off so that you lower your tax bracket, but then you also create LLC again to protect you from your personal assets. So in terms of lawsuit or any issue, it's just your business. Now, some people's idea of creating a business that they want to take advantage of their business and write off their personal expenses. Sometimes things that is even not business related, they will take advantage of their business and write these expenses so that all goes into business expenses. So I can often hear, oh, if you have a business, you can write on it. But remember, that LLC you have, the rules governing LLC or every business is that you have to separate your personal life from your business. So in other words, you cannot mingle your personal life with your business. Your business revenue and expenses strictly has to be business related, has to meant for that business, or apportion the portion of that expenses that is business. So if you're being caught with IRS or even a lawsuit, just a general lawsuit, that you have been mingling your personal life with your business with the smartness of able to write all these expenses your business, at that point you lose your protection of the LLC. And there have been cases where people get sued, their business gets sued, and they go to court and they say, oh, I have LLC, and the court look into it and they're like, no, you have been using your business in a way that, because that's why I said, if you're running a business, it has to be properly structured. That's why, especially when you are starting the business, I recommend, which I do, I create the business and then I normally give them about 5 minutes or 1 hour counseling and educate them, advise them how to separate it from life, how to have a separate business account, all these kind of things. So be careful. Don't just do it for doing sake. Louis said something earlier. He said, if you don't force to get big tax refund, if you don't deserve it. And I agree with him. And one thing I also say in addition is that there's a lot of, aside creating a business, there is a lot of credits and deductions out there that sometimes we don't even know. You could even Google them, tax credits and deductions, or talk to your tax professional. Sometimes there are so many things. Maybe you have a mortgage, you can write off the mortgage interest. You can have a property tax. Maybe you have kids going to daycare, or kids in college. Some things we don't know. From my experience, I've come up, there have been situations where people just cheat on their taxes. And when they are being audited and look at it, And if I'm doing an amendment or something, I realize that, or sometimes go back 3 years of people taxes, because I'm a consultant, tax consultant. So sometimes people contact me, can you look into my past 3 years of taxes? And I said, okay, you have kids who are in college, maybe this dependent age is 18 years. I said, go to college, yes. Did you claim the educational credit? No. So the point I want to make is there's so many tax credits and deductions out there. Explore them. That alone could get you a good decent refund. Rather than just the mindset of going out there cheat. You could make a decent amount of money. But if you look for all these credits and deductions, in most cases, that alone will get you a good refund and you pay less taxes than just going out there and creating a business and all that. If you have a legitimate skill or something that will bring you revenue or money, go for it. And even if you're starting the business, please don't just go online, just get the EIN, register, have a business, and you have no knowledge, no basic knowledge. I mean, sometimes just a few $100 of consultation to some people like us or a CPO or somebody who is in this for could save you huge trouble in the future. So that's what I want to add to that point.
All right, thank you all so much. Our brother, I hope your questions were all answered. All right.
Uncle Frank.
Yes. Yes, sir.
I think, just give me a minute. Somebody sent a question, and somebody had asked if you, when you have a business, do you file a separate tax for the business, or you can combine it with your W-2? And I said it depends on the type of business setup. So let me, and I think Mr. Tio too can join in after I speak. I mean, I guess we don't want to leave you behind. So the type of business setup, just like Mr. Opon was saying, will determine if you need to file a separate tax return or you can combine it. I think the default, like Mr. Opon was saying, for most people it's all out there. Just do an LLC. Okay, LLC, just for protection, limited liability company, protects you from liability. But if you are a single person and you form an LLC, it is called a disregarded entity. That one, you combine both. You combine that with your personal taxes. So you do it on one tax return. So it's just the same as a Schedule C. Somebody that is a self-employed, Schedule C. LLC, single member LLC, is a disregarded entity and is treated on the same 1040 form. However, if you form a corporation, a partnership, or I think that's more common, you have a corporation that files a separate tax return. Corporation files it, and then the profit and losses also goes to the owners. Then the owners will file their separate tax return. If you have an S corporation, it does the same thing. C corporation files separate tax return. S corporation does the same thing. S corporation, you call them those flow-through entities. That S corporation is like one person can be in a corporation, but partnership, which is 1065, S corporation is 1120S. A C corporation is 1120. That's the form that you file your taxes on. And then a partnership where two or more people form what business together. That one you have to be a partnership. But two or more can also be an S corporation or a corporation. So any entity that you form with just yourself, and then you do it an LLC, it's an automatic 1040, like disregarded entity, which is a Schedule C. So that one goes with your 1040. If you have a separate, properly established C corporation, that's a separate tax return, and then your personal tax return also separate. If you have an S corporation, it's a separate tax return, and your personal tax return is also separate. If you have a 1065, a partnership, that one is also separate, and your personal tax return is separate. However, C corporation, S corporation, 1065, information from those businesses are used. Those are used to prepare your personal tax information. That's where you get the K1s. We call the form Schedule K1. At the end of the year, they will give you a form to tell you this is how much income or loss the business made, and then you will add it to your own W-2 if you have them. So that is how it is. It depends on the type of business setup that you have. Thank you.
Thank you, sir. Mr. Theo, do you have anything?
Yeah, those are very great points brought by Luis and Mr. Kofi, and I agree with their assertions. Yes, if you legitimately own a business, it's not a bad thing to own a business. However, I think the caution we're trying to put out there is doing the right things so that you don't get into trouble with the federal government because our custom is not that generous. Yes, if you own a business legitimately, it's a good thing. However, you have some responsibility that comes with it. Don't just create a business and leave it for someone else to think about it for you and generate documents about your business for you. No. Take ownership, take responsibility, invest in your business. Then you can get the desired outcomes that comes with it. What do I mean? Some create business and they lose track of expenses about a business. From January to December, they are making expenses. However, they are not able to track these expenses. So at the end of the tax year, they are forced to manipulate and reinvent numbers to present for tax purposes. That can be detrimental. So the caution is this: what are you using to track your expenses, your receipts, and all that? There are resources out there that many people are using. Some see how beneficial QuickBooks can be. QuickBooks is a great resource. It's a great program. However, it's not free, but it saves you a ton of trouble. You can track your receipts, your expenses throughout the year, link your cards, your bank accounts to QuickBooks. At the end of the day, if you're a business person, QuickBooks just creates it creates a beautiful report for you. You can categorize your expenses as personal and business, but do it right. Don't, as Luis cautioned, don't use your personal stuff for business and vice versa. No, it is wrong. IRS will not take it kindly with you if you go that route. However, if you are able to have a system where you can track, monitor, identify what your legitimate expenses are, at the end of the day, you will realize that there are a lot of things that we are leaving on the table that we are not even thinking of them as business deductions that are legitimate deductions that we can. As it is a legitimate deductions, yes, IRS have no problem with it, but make sure it is the right deduction you are taking and learn how to have proper records. Good record keeping is key to managing your business. That way, you are not struggling at the end of the year to look for money to report for business expenses. If you are in operation as a business, there are a lot of things going on with your business. There are a lot of expenditure from your home office, from the vehicle use and all that. There's a lot, and your tax preparer can help you get educated or guide you properly as to what things can be properly categorized as business expenses. That way you do it right. So those are some other areas I would like to touch on if you decide to create a business, not for the wrong reasons.
Thank you so much, Mr. Theo. Please, like I said, if you have a question, they are here because of us all. So you can raise your hands or put your questions on the chat and we'll call you. Sister Nate, please, can you ask your question?
Yeah, thank you so much. Thank you all the panelists. My question is in regards to you having a business and not using the business funds as your personal for your personal usage. So if you solely are a business owner, that is the only source of income to you, how then do you take care of yourself in terms of your personal bills? So if I want to buy grocery and the only source of income is from my LLC, right? How then do I take care of my home, pay other bills that are not related to the business if I can't take money from there? Thank you.
Thank you, or any of you.
All right. So, and I think tax professionals should jump in also. So, if you have a business that is your primary source of income, we are not saying you cannot take money from it. I think what all the professionals are saying that you have to keep good books and records, because a business is regarded as a separate entity from your personal life. So we don't expect you to commingle. We call it commingling of funds. Your business should have a bank account that it operates out of. And then you should have your own personal bank account so that you can easily trace monies that you take. Since nobody is paying you like a W-2, but when you work and the money comes in, then you use them for your personal business. Would encourage you to have a personal bank account if you don't have any of these cool QuickBooks and other softwares. Use your bank account properly. So if your bank account is strictly business, so any monies that you want to use for your personal thing, that's what you transfer to your personal bank account and you use it. So you don't want to use all the monies anyhow. You pick up the business credit card and you swipe. You pick up your personal, you swipe. So what you're doing is effectively you put in some of your business expenses on your personal bank account that you would not be able to track maybe at the end of the year. So we highly encourage you to keep separate books and records. Make sure you can account for all sources of income, but it's your own money. So, but the monies that you take out, it's not a business expense. It's not a business expense. So if you want to do grocery, it has nothing to do with the business. But since you had actually invested in the business, assuming if you're just a 1040, that's the profit, that is what you are spending for your personal thing, and you have to pay tax on it. So assuming you brought in $20,000 the whole year from your business, you have a separate bank account. You have where it shows you the supplies that you use, all your other expenses that is running through your bank account. Because trust me, when the IRS come to you and the audit, your bank account is going to be summoned. They're going to subpoena your bank accounts anywhere from your personal to your business. They summons everything. But when they can trace your business expenses to your business bank account, then you give them limited access now, so they don't have to bother you so much. So what the money that you're spending from your grocery and other things, paying your mortgage, is the profit that you are spending. It's not the actual gross income that is coming in. So when you start spending that money, you are telling us that you're going to make that much profit. Okay, so the IRS has so many ways that we can flip things. And then even when you have too much expenses, the IRS can just flip it around and say, okay, for you to spend $1, you have to have $1, right? So let's say your business doesn't report any income or very little income, but you have huge expenses. Then you are telling me you have to have that money before you spend it. So the IRS can spend it and say, now, assuming you have 20,000 in income, but 40,000 in expenses, now we're going to flip it. Then you're telling me you had 40,000 on top of the 20. So your starting line will be 60,000 as income. Then we'll give you your deduction. So you have to defend. How you're going to do that is keep good records. Thank you. I think my other people can join in.
Thank you.
Well, I'll add a little bit. He pretty much has explained everything. But I know in taxes, there's a lot of terminology. So maybe I'll try and also. Okay, this is the situation. You have a business account. Okay, let's say you sell hair products. So you open the business account. Anything that comes into your business account is your revenue. Now, if you want to, like you're saying, have personal bills to take care of, don't use that account, business account, for that personal thing. Transfer money from the business account to your personal account. Because anytime you transfer money to your personal account, it's technically like you're paying yourself. But if you have LLC, one person LLC, at the end of the day, your net income is what matters. But then you transfer that money to your personal account, and then you can use to go do groceries. You can do whatever you. If you are short on business, short money in your business account, and you feel like you have to transfer personal account, normally my recommendation is that, I mean, right now, QuickBooks, other things, but if you don't want to invest that, you just as a small one-man run business, if you're writing a check or whatever you are on the memo, make sure you state that it's added capital. That means you're adding money into that business. But the whole point is that don't go out there using business like account for gross data. The moment you start mingling your business finances with your personal, now remember that business you're creating that simple. Like I always say in this country, things look simple, but the rules behind it is complex. With this country, everything is designed to make it easier for us. You can go like that. But when something happens, you realize, oh, all these rules are behind it. So the point is that IRS have clear established rule of running a business. And they say that if you're in business, what comes in is revenue, what goes out is expenses, and they should be clear, and it should be business with the intended purpose of that expenses for their business. So if the moment you're saying, okay, my personal bill, I'm busy, swipe my business bank account or business credit card, all this, then you lose that protection. And in the first place, even there's a lawsuit, you don't have any protection of LLC. And also, IRS agents, you give them the room to treat you anyhow because they can say, no, down, this is this. If everything came to your business personal, they could decide to classify as income. We're not going to accept this because in the first place, you are not following the rules. So, and dealing with you is pretty much whatever they decide. You can't really fight it because you are not following the rules in the first place. So I hope if that point is clear. That's all.
Very clear. Thank you.
Yeah, we'll just add a little bit to Annette's question. With the kind of business that many of us own at this level, maybe they are just small businesses, maybe operating from your home office. Some individuals have offices that they operate from. If it's a one-man show, as described above, do you have a system of paying yourself that you can track? If you decide to put even your kids on your payroll, so that you are paying your kids who are under 18 years. You can put them on your payroll and give them legitimate tasks in your office to sweep your office, to clean your table, to pick up trash, and you put them on your payroll. Do you know how much money you can deduct for each child legitimately each year? If I remember the figure, it's almost 13,000. I can be corrected, Bra Lewis and Bra Kofi. For legitimate child tax deductions, if you put them on your payroll. So if you do your business right, you'll see that there are a lot of things that you can legitimately deduct that will not make you struggle at the end of the day. So if you have 3 kids and they are under 18 years, they can be on your payroll yourself. How are you paying yourself as a business owner? So I think that brings to light the question, you own your business, I want to use my money, how do I use it? Are you paying yourself? So have a system of paying yourself. If you put your kids on a payroll, have a system of paying them. The money at the end of the day comes back to you, but is it legitimate? Yes. Do you know how to do it? That is the question. If you have questions about it, you can get help to get that done.
Okay, thank you.
Thank you. I have about 2 questions on WhatsApp, and there's also some question on the chat. But since one of these questions, I think it go to Mr. Yeboah because of what you said. I think on your introduction, they said that you said about if you are filing for your children have to be here at least 6 months. So the question was, what about if we Africans, sometime we take our kids home for schooling, for more than 6 months or other thing? How do they go about that? Because they still pay for their school fees and they still take care of them when they are out of the country.
Okay. Yeah. So what we're saying here is telling you the right way, what the law says.
Correct.
Okay. I know there are a lot of information out there that people have been throwing around, but what we're telling you here, I'm not here to tell you to change anything. If you think you're doing it wrong, you can scale back and do it right, because who knows, it may catch up with you. Okay, you have kids. They are in Ghana. They have social security numbers. They are not anybody's kids. They are your kids, right? So if you're claiming them and you're saying they lived with you, maybe you've already established that pattern. When you had them in the beginning, you've been claiming them every year, year by year. Now you've already created a pattern for yourself. So if this child shows up on your tax return, they actually have already done the matching to know that you are the parent. So those ones you don't have to worry so much about. But the new ones, because remember, if you're creating any new pattern, now the IRS can come in and tell you to verify. They have so many things for you to verify to determine that this is your qualifying child. You can show the school report, your birth certificate, your hospital records to show. So assuming you don't have any of these ones, and then they ask you to provide them, at least you can provide, if they are your legitimate kids, you can provide the birth cert and other things, the address. If the school report, they have to have their name on it. But like I said, if you have already established that, especially when you first had the baby and you've been filing multiple years, I don't think you will run into much problems with that. But when you keep taking them off and on, people keep, oh, this year, I'm not the one claiming the case, then I give it to my wife. My wife takes them. The next year, I take them. No, but if you keep doing that, then you are just putting yourself for IRS to come after you. Because if, for example, if you're claiming head of household status, only one person is just that can leave the ink. It should be 6 months or more, right? So the child cannot live with half and half, 6 more months. So one person is claiming that child. Sorry. So you have to be careful not to be flip-flopping the case based on who is, and you have to be the one that provided more of. And I think somebody asked me this. Let me chip it in. More of their upkeep. Somebody says, "How about if I'm paying the child support? Do I get to keep or claim the child?" It depends on your divorce or whatever decree that you have. If the courts awarded the kid to you to claim, you can claim the kids, but only on a limited basis, because you're claiming the kid because the court awarded it to you. But you're not claiming the kid because the child lives with you. They can be on your tax return, but you should not get the full benefit of the child living with you. So you can only claim the child for maybe head of household status, or have a qualifying, but the other credits you will not get because you are not the one taking care of the child is not with you. Even though the court has granted you that title to be like claim the child, you can claim them on limited basis. So the key or the golden rule is the child has to be living with you for more than 6 months. I hope it's a little better. If you need further explanation, you can reach out to me, I think, because of time.
All right. Thank you so much, Mr. Ebua. And let me go to this chat. Eben said, could you kindly walk us through the tax filing process for first-time F1 students using platforms like Free Tax USA or TurboTax? Thank you. I know, I mean, this will be all day for us to go to the process of filing taxes online, but maybe
I guess it's only for F1. Let our tax preparers help us. The F1 student here.
Give a quick brief on that person. Mr. Kofi or Mr. Theo?
Okay, so visas, technically, visas have, okay, I hope you guys, so visas has limitations. So if you're here on a visa base as a student, it's technically you're not like a resident, you're a student. So some schools are very strict to a point that even to continue to let you school there, they require you to submit your tax return where it has to state that you're the 1040 and which is non-resident for. However, some of these visas, sometimes it depends. Some of them 5 years, people get a job at the school use them for research. So with time, their status is, it's not that in a way. And I've had instances where the regular 1040 being like a resident, they can get away with it. But school visas has limitations, and in my case, I recommend if you just came here, it's better you talk to a professional like me. We look into everything that, because some of them has limited time. I've even had cases where people are even here for a course, maybe a 6 months course, maybe a year. So your visa status is so limited that you don't qualify to file as a resident, or the only option is non-resident, which is 1040 NR. So in that case, just don't go out there and start using these softwares. Softwares are just a tool. You could use it wrongly. It's like a human hand. You could use it for good things, good for bad things. It's like a pen. I can use to write. I can use to do other things that is not intended purpose. So talk to your tax guy. Look for a professional. Let him know your status. Some of these things are online. You could research. And sometimes, from my experience, sometimes the schools are very strict. They are very specific. They want to see how you do your taxes to continue giving you this, let you school there and all that. So I wouldn't, because these visas, they come in different time limits and all this. I wouldn't tell you to just go and do it this way and do it that way. That's what I can say.
Yeah, just a quick addition to Mr. Kofi's point. Yes. As a student in the US, whether you even make money or not, there is a specific form that you need to still fill when it comes to taxes, but you need to get the right form. And yes, when you contact us, we can help guide you which form you need to fill when it comes to that kind of a scenario, or the 1040 NR that you need to file as a non-resident student can also be helpful to your specific situation.
Thank you. So, Eben, please get your number and call them so that you don't. Oh, okay. This one was already been answered by Brother E.
I think there was one that I needed to elaborate. I mean, if you permit me, and I think there's a hand, Stephen. I will come to you. Let me elaborate on this. So somebody had asked if when you get audited and you have to pay back, are you in event paying the amount that was refunded to you, or some extra penalties are added? Okay, so my answer is if you get audited and you have to pay money back, there are so many different factors. So most people, what you realize is that you pay even more than the amount that was refunded to you. So and there's multiple reasons why. Like I said in the beginning, when you get audited, usually we find an issue with one tax year, and maybe by the time we are done, it's 3 tax years. So you see that you're paying more. And then the audit is actually to correct the wrong that you made on your original tax return. And then when there is a major understatement of income that they find, we have a penalty of 20% for substantial understatement, or there's another penalty which is also 20%, being negligent. So it's up to the agent to accept those penalties after they audit you. So if they accept these penalties, then automatically you're more than likely even though it's not always the case, it's more than likely that you probably will pay more than how much you were refunded previously. So it is better that you do it right so that you don't get in that mess, because nine times out of 10, they normally will get you for 2-3 years, and then it adds up very quick. Thank you.
Okay, can I speak?
Yes, I think Steve, you
Yeah,
can
go
speak.
ahead.
Okay, so thank you guys for this platform. I think it's really a great platform to share. So my question was, for instance, so if you have a child in the year and it's somewhere towards the end of the year, because I remember you mentioned that the child has to be with you for more than 6 months. So let's say you have a child in the last quarter of the year. In that situation, is there, if you claim the child, is there any penalty to that, or given that this is the child's birth time, that should not really be a problem?
Okay, I think I'll do this and then
let me come in a little bit.
Okay,
Louis,
go ahead.
sorry, it's not that I'm trying to, but
No, that's fine.
Because Louis, this comes back into some earlier things Louis said, but at the end of the day, a child born, it doesn't matter the time of the year, of the tax year. It could be December 31st of that tax year. A child born in that tax year is considered living with you for the whole entire year. So keep it in mind. The same scenario applies to a child who died in that tax year. Unfortunately, it's life, and we have to be realistic. So if you have a child and that child dies in January 1st or December, whatever, that is also applicable. You can claim the child for entire tax year. So yes, I once had a case where somebody, his taxes, he had one child and he didn't make that much on her taxes, and his income was low, so he qualified for any income grant order. So he had a child in October, and when you are filing taxes, back to what Luis was saying, that you have to live with a child for more than 6 months. If you're filing to taxes, or some of you, if you do your own taxes, you realize they will ask you how many months did the child live with you, and the person ended up putting, I think, just 2 months. So it didn't really work out, and later I spotted that I was to be corrected. And all comes down to, especially some people say, oh, I'm doing my own tax. Oh, great. You might not have a tax. If it's not a complex tax, fine. But if you can afford, always deal with a professional help. So yes, whatever December 31st, June 1st, whatever the month the child was born, it's like living with you for the whole year. Back to that Louis thing of saying 6 months. Remember, whether you're Americans here in the United States who write these tax laws, these congressmen, they are not from Ghana. They don't live in Ghana. They write laws based on American territory, how their life is. So they don't write laws with the assumption of all this. The rules, IRS rule says that to claim a child, the child has to live with you for more than half of the year. And you have to provide more than half of the child's support. That means accommodation, all the other factors. So that is the established rule. Like you said, having said that, if the child is your biological child, son, daughter, is on it, hey, that relationship is strong. IRS pretty much respect that relationship. What I've come to realize that because to claim a child, the child has to relate to you, either your child, daughter, son, nephew, cousin. But as the relationship live further from being daughter, son, the requirement become higher. It becomes higher. So be careful, and that's how people get in trouble, because most of the time, if you're claiming somebody's child, you're going to put nephew or cousin. And that requirement is different, because when IRS come after you, you have to prove the relationship. Have to prove birth certificate that me and this lady, our mom is this mother. By birth certificate, they can trace that. All that, till the requirements is higher. That's why if the child is not your biological child and you're claiming the child, make sure all the requirements are intact, because they know that when they poke you on this relationship, on this, those dependents you claim that you consider to be cousin, nephew, niece, the requirement higher. And from my experience, it becomes tough for people to prove themselves. So I hope my answer. Louis, sorry that I cut you off. If you have to add something.
No. I think you did a perfect job on that. That's exactly right. If it's a newborn baby, it doesn't matter. You can go up to the last day and it's assumed the baby lived with you for a whole year. So we're talking about babies, kids that have been born already, and then they have over a year, and then we're trying to play them with that who is claiming who, and then you have to prove that the baby, the child lived with you for more than 6 months. But for new babies, you hit the net right. You hit it right. That's fine.
Thank you. That's really good. I just wanted to, make sure everybody understands that part, because, I've had that situation many times as well. So I just wanted to make sure we all understand. Thank you, guys.
And again, in that scenario, put 12 months. Don't put 1 month, 2 months. Child born 2024, even if December 31st, if you're filing your taxes, ask you how many months you live with that child, put 12 months.
All right, thank you all so much. There is another question.
Frank, somebody asked if hang on.
If a person get audited, all right?
Then we have answered that. Okay. He said, can you prepare business tax separately from your full-time W-2? I think we haven't answered that. So I don't know if the person wants to mean, if you have a W-2 income, you can flip it and do a separate, prepare it as a business. If that's what you mean, then that is not, you can't do that. But however, you can have a business, and then like the tax professional said, Mr. Tio, to be specific, said you can pay yourself. So if you have a business and you're paying yourself, you can have a W-2 for yourself on your own business, if you can do that. And then I think if you contact these tax preparers, they will be more than happy to show you how to do that.
Let me add something quick, and it's very important on this point. And I see that mistakes makes a lot by our people and people who just start their own business. And I was about to give that advice later, but I probably won't say it now. Please, the world is about professionalism. Some of us, we are here, or if you go back home, the reason why our country looks messed up is because we don't believe in professional knowledge. If we want to build our house, somebody recommend a guy that mason who lives in the area. Oh, I know him, he built my house. We don't look into whether he went to polytechnic with some basic training, because those things help. And the whole thing I'm trying to say is that if you have an intention to create a business, happy business, sometimes, especially in the summertime when we are not busy, a few $100 will save you a lot of problems. I've had instances where people just create payroll for themselves. It could be one person LLC. Now, what you don't know, like my brother Tio said, if you create payroll for your family, great. You could get all that great deductions. But also, if you create a payroll and you create payroll for yourself against your business, at that point, you cannot file Schedule C. You have to, now your business is corporate. Because Schedule C is when you pay yourself from your business. So in other words, okay, I transfer money from my business account to my personal account. And that's how you pay yourself. It's not a payroll. It's a one-person owned business. At the end of the year, we can do Schedule C. But there have been instances people will go to paycheck.com and now, put himself against his business account and start paying himself and he's going to get W-2 form. Because you're paying yourself from your W-2 form, now you're going to use your W-2 form to file your personal income tax. But then the business is now a corporation. That's why all these institutions we work for, they file corporate tax because they're paying us from that company. So keep that in mind. Don't go out there, put payroll on yourself. And I've had in instances people do 10 and they do all these weird things and I'm doing Schedule C. No, you have paid yourself on W-2 form. And by doing that, you have to file your taxes with a regular W-2, and then file the business one as a corporate. And the entity aspects is also a different story, because sometimes it depends other factors. Because, for instance, some people say, I want to do S corporation. S corporation has limitations. There are some businesses you cannot file S corporation. Some businesses are exempt from filing as S corporation. Some, in other way, maybe you'll be finally pushed to a C corporation where you'll be facing double taxation. So there's a lot of things going on. And again, few $100s of consultation, getting a clarity of what you're trying to do, your goals, will save you huge trouble in the future. That's what I want to add.
Thank you so much. Okay. So there is another question here. What of claiming your parents that just joined you here in the United States?
Let me respond to that one real quick. I think I have something I can share with him. Let me see if I have that point pulled up, if it's right here. I think it's under claiming as a dependent. Let me see. Oh, no, right here. Who's a qualifying child? So before I come to that real quick, I think we're lingering on that who qualifies as a child issue earlier on. Yes. So I highlighted the green and the red. For example, a child in college living away from home is considered living at home with the person claiming them. Qualification is not limited to a biological son or daughter. It could also be other situations. Yes, when it comes to parents, as a dependent, you are able to claim your parent as a dependent, but at that time, your qualifying status is going to come into play. What status are you filing as head of household or what? So first of all, you have to clearly define what status you are before you can claim your parent, who is an elderly one living with you, and maybe more than 6 months, and you have provided care to him. Maybe Bra Kofi and Bra Louis can throw more light on that.
Yeah, I think for parents, the deal is, I don't know if you using your tax software, and then I think if you've gone to Mr. Upon and then Tio, they probably will do more detail. But this is for people that try to do it on their own. If you want to do it on their own, like Mr. Upon said in the past, they will ask you how long have they lived with you. So your parents with a social security number, yes, those are one of the few qualifying things. But now, when you dig down, it will ask you how long have you lived with them, and if you provided more than half of the living expenses. So it goes like that. But if you're doing it on your own, you get to check the right box. But you can claim them, yes. If they just join you, you can still claim them, but under limited circumstances. But if you go to them, professionals, they would actually be able to tell you where exactly that you can start from. I guess we should be good on that point.
Okay. Any more questions, please? All right, it's now 6:35, almost 8:35. So if there is no question, we normally give our panels their last word. And I see our father here, Reverend Martin Osai here. So hopefully today we have a blessing before we leave. Our pastor can bless us before we go. But before, if there is no, hold on, I think I see one. Okay, if there is no question, I think we'll give all the panelists a few minutes to for their last word, and after that we'll get an announcement, and our father also maybe give us one word and bless us before we leave. So the panelists, we can go with the way we started. Mr. Opon can start, and Theo and Brother Lewis can also continue.
Okay. So I'm glad to have done this with my co-brothers for all the great knowledge, but I will still revisit Mr. Lewis, very one important thing he brought up. I was so glad he brought it up. He said that your taxes is pretty much the summary of your life. And it's true. If you look at it critically, your taxes has your case, whether you're married, where you work, your phone number, occupation. But it's pretty much like, if you remember as kids, writing myself, it's all about your life. So one thing I want to add to it is that, please, some of you, be careful whom you do your taxes with. Because I already talked about how to prepare yourself, but choosing a tax preparer too is very important. Because especially if people do your taxes and you're not registered like Mr. Tio or myself, you don't want to be there. Because remember, because they didn't sign or they don't have their footprint, they have no responsibility on that taxes. And one thing about these people is that, especially if you file your taxes, get printed for you say self-employed. One problem is that these people, they are not even trained on how to take care of this sensitive information you are giving into them. And nowadays, we have all witnessed in a situation whereby even the children are, we see children with identity theft, people take their information and all that. If you're a tax preparer like myself or Mr. Tio, he will tell you that every year, somewhere, somehow, you submit somebody taxes and say, oh, somebody has claimed your case. I said, my case? No, that wouldn't do that. That is not here. Because maybe where you make your information available, you could be vulnerable. People who sign your taxes have some responsibility. I mean, chunk of the responsibility is on you, but they have some responsibility. And to my knowledge, these registered guys have knowledge of how to secure your information, your children's information, how to take care of them, and all that. So be mindful of where you file your taxes. Also, please, let's believe in professional knowledge. Sometimes, the Americans, they do that a lot. I've had instances where people come to me and say, oh, I don't do my taxes with you. I do myself, but the past 3 years I've been paying back. What is going on? And I'll sit down, analyze the taxes, make sure is he claiming the right exemption on his W4? Is he looking for the right deductions? Is there other things he could have done? Does he have to contribute more to 401k? So we could make a proper recommendation, because the taxes, you don't have to cheat. But if you learn or you get a proper knowledge, you could save a lot of money. You could save a lot of money on your taxes. So let's be mindful of that. And in my case, like I said earlier, I'm a tax instructor. I train people who want to come to the tax world. I also do tax consultation, help people establish their business, nonprofit, everything. And after doing it, I make sure I sit down, give them basic advice on all the do's and don'ts and the trouble areas, how to avoid problems and all that, so that at least you have fundamental knowledge to start your business, so that you don't walk yourself into a situation. Because in America, things just look easy. Wait till something happens. Just that one instant, the stress you're gonna go through, it's not work. And that's all that I will say.
Thank you so much, Mr. Tio.
Okay, thank you very much, Mr. Opon, for those nuggets. Yes, it's very important. Many of us have what we call primary care physicians. We do annual wellness checks. We go, at least the insurance, if you have health insurance, they'll pay for it at least once a year. And you don't have to pay much from your pocket, and they will do it. But the question is, when it comes to our community, how conversant are we? How are we willing to do what is called annual financial wellness check? Many of us don't have a clue when it comes to our finances. And many of the problems we are running into in our community is because of lack of basic financial knowledge. So please invest in your financial wellness. It's very important. Bra Kofi said it loud and clear. Believe in professionals. They will save you time, money, and trouble. And the other thing I will say is, yes, security in the world we live in today is very crucial, important. Where you send your information to is very important. I remember when I was setting up my tax business, one of the key concerns was, how will I secure the service I use? So I got what has all the security features to make sure any information I put there is well secured. So Bra Kofi said that, and I just want to repeat it. It's very important that we protect our information, and because identity theft is real. If it has not hit you yet, it's real. It's out there. Thank you.
Thank you so much. And Mr. Yeboah, before you say something, somebody sent a last question to you. So I'll let you answer before you say that. I think maybe Mr. Opon just said maybe Trikada, because the question was that you said that the taxes, your taxes is all about you. So he was saying that what would be your advice, especially some of us who are in the associations or in the churches or community, whereby sometime when there's a funeral, they use their account to collect the monies and for those purposes. What you say about it? Because I think because it's about you, they don't want the account to be a lot of money over there, although it's for a funeral or something like that. So maybe before your last word, you can also answer that for us. Thank you.
Oh, okay. So, I mean, I think the government is pretty much aware. I mean, in our society, they, like, I think, who said it? Mr. Pono, I think Tio said that too. It's different cultures, right? They are not privy to most of the things that we do. But the question is, do you have an explanation? Can you remember when the time comes and you're called upon to answer, where are all these monies coming from? Can you remember? So if you're receiving checks or anything, if you want to make an indication, it's a funeral donation, it is a wedding donation, it is something, at least most of your checks that will line with that deposit at that particular period of time, then you have a solid explanation to give, because those incomes are not taxable. Okay. So you have to know what is going into your bank account and then have an explanation if the government should come knocking. And I think when I'm done, maybe if they want to ask some more, but my closing remarks is thank you, Frank, for doing this. I think more of this will save people time and also money. But like two professionals have said, your tax is your life in so many ways, because we live in America and it's about information. And the government have so much information about us. So if you seek good counsel, or if you seek good professionals, they will be able to walk you through the right way. Even if that, you know, all these billionaires and millionaires out there, they do tax planning. Like the preparer said, there are so many credits out there. Sometimes you hear some, you think, no, this can't be true. It is true, but you have to know how to work it. So if you invest some time to understand your own tax situation, make sure every item on your tax return you do understand. Make sure when you file your tax return with people, they can give you copies of those tax returns. They are able to give you copies to keep. That will help you to identify. We can't sugarcoat this. There are bad preparers out there too. But spend some time and find the good ones. Get good updates from them. And if you are their client, they will give you good updates. Now, because if you don't make sure your taxes are done right, remember, you are ultimately the sole person that is responsible. Once that tax return is sent, you are responsible for everything that is there. When there's an audit, it's you. So if you get with the right preparer, when you have an audit, you can reach out to them and they will respond. Many a times, those preparers that we use, because we go in to tax preparation with the intent of getting much refund. That is our focus. If you start off from that point, trust me, you're going to get bad preparers because they will do it for you. And then the responsibility will be on you. In 2-3 years' time, the government, trust me, the government will come knocking. And then you'll be chasing after people. By that time, you call the same preparer, he is not going to answer his phone. Guess where he is? He's in Africa. Yes, many of the time. They will come to me and say, hey, I've been calling this guy. I don't know what is wrong. He never responds to my call. But guess what? Come January, he start calling clients again, right? So if you see that, you have to watch out. And lastly, we don't expect if you go through the right people, you will save yourself. There's limited chance of audit. But when you do get an audit, I hope you don't, you take the first precautionary measures and stay out of trouble. But when you do get in trouble, whatever it is, do not panic. Do not panic. Still seek for the right guidance. You can reach out to your tax preparers. You can reach out to me. If I'm not guaranteeing that I'm just going to help you get everything out, but at least maybe I can show you ways we can fight some of these things. And you have to be very patient if you want to go through the process. Don't get scared. They will write you letters. They say you're going to the tax court and all those things. Don't get scared. If they say file an appeal, file an appeal. Because what it is you are going through appeals process to have another person listen to your story. If you don't even have a full-blown audit, if you have a full-blown audit, you have an IRS agent behind you, they look at your records and they say, hey, no, I think you didn't do this right, and you're going to be liable for this amount of tax and penalties. If you don't have anything, you say, okay, I get it, but I disagree. How do I file for an appeal? Even if you tell them you want appeals, they have to forward your case to the appeals department. Now, you have another way to explain yourself. Most of the time, some of the appeals personnel are more lenient, right? They are not as hardcore because they have flexibility to at least give you something. You may not get everything, but if you are able to argue your case outright, and this is where your professional tax preparers will come in, I can come in too and then help you. Okay, this is how we're going to tackle your issue. Okay, for you to prove to them that, hey, at least you had this business and you incur some kind of expenses. Your tax professional will ask you to bring your tax copy of your bank statement. Let's go through it. Which items look like something that is deductible? You can start from there. So there's so many other guidance that people can give. So when you fall into the trap and then you get letters from the IRS, I know these days our health matters. So I know most people, when they see the IRS letter, even the envelope, one time somebody told me they got an IRS letter and it took them like a whole month to open the envelope. Little did they know that it was just a refund money for them, a check for them. So don't go through that heart attack. Open the letter up, don't panic, reach out to the right people, and I think if there's a way, we're always more than happy to help you. Thank you all.
Thank you so much. So Kofi, Theo, and Louise, I would say thank you so much. This was a great presentation, great closing remark and everything, great answering of the questions, and I know everybody question was answered. Like I said, we'll continue this next year. We do this to help our own community here. Just a few announcements. The MSC in Washington is coming back again to the Dallas area this March, next month, which is the 7th and the 8th, to renew Ghanaians' passport for them, like we did, I think, 2 years ago. So please, if you still need a passport, reach out to me. We already closed the registration, but just if we can help you get in, we will do our best to help you get in. So please reach out to me. We also want to take this opportunity to thank our leaders in the community, which are me, Koga. Koga has been doing a lot of things for us. In fact, they are behind this passport registration or passport renewal that we are doing here. So we want to thank them and thank all our leadership and everything. I see our presiding elder, Elder Daniel Akono from Central. We also want to thank him so much. He's the reason why we have this town hall to discuss about taxes. So we want to thank our presiding elder too for giving us our partner with us today for this great town hall. There is, I think I was trying to see if there is some leaders from Koga here, but I don't see anybody here. So if there is any other leader who is here that we haven't recognized, please, I will just give you just a minute if you want to say something before we give it to our daddy for the last remark, and he will bless us too. Any Koga executives on the platform? All right. So if there's nobody saying, again, Mr. Kofi, Theo, and Louis, thank you so much for honoring the invitation. Daddy, please, over to you.
Thank you so much, and thank you, community. Mr. Frank Mafo, thank you so much for putting this together. Great information, and the Bible says, for lack of knowledge, people perish. Imagine your IRS letter had your check and you are panicking. Fear, when you don't have the need to be afraid. So many times it says in the scriptures, fear not. So again, thank you all professionals, Mr. Kofi Opon, Mr. Louis Yeboah, and Mr. Theodore Kwamla, and all the other experts that are on here. I'm very impressed to see this forum. Mr. Mafu, thank you so much. You did one on immigration and today on taxes. And this is the type of information our community needs. And I want to thank you for spearheading this and all those who are making this possible, and the professionals who, out of your busy schedule, have come to inform the community. So God bless you all for being here. Let me just close us in prayer. Father, we just want to thank you for our Ghanaian community and friends of Ghana and all those on this call today. Some may not have asked any questions, but they have been informed. Thank you, Lord, that information is so critical. For when we don't know something, we make mistakes. Somebody rightly said that we need counsel. In the multitude of counselors, plans would succeed. The Bible also tells us that where there are no counsel, plans fail. So help us to be knowledgeable, to be enlightened, and to be people who are not filled with fear, but boldness and confidence, knowing that information would take us out of a lot of headache. So I want to thank you for these professionals who are here tonight. I thank you for this season, for them that it will be a blessed season. I thank you that our community will trust our own, that they will take their business to the professionals within our community. I pray that those who have any challenges on this call today, that you will calm their fears and you show them the way. We ask all this in Jesus' name. Amen.
Amen. Thank you all for joining too.
Yeah.
Thank you.
Mr. Maf, we also thank you. You have been great. I admire you, all the energy, the strength to always, out there fighting for the community and everything. I hope someday you run for mayor and I'll vote for you.
Yes, sir.
Amen.
Yeah.
Amen. Amen to that.
Amen.
All right.
God bless you all.
All right. Thank you, guys. We'll meet again hopefully next year, God willing.
Hey, Bra Kofi.